What's going on, everybody? So I'm going to do a quick little training video recap. If you've seen the last video on Qualcomm, I'm going to give you another example because I figure the more times you see these examples, the easier it is to kind of, stick in your brain. So basically, this is going to be for day traders. This is going to be for scalpers. Okay. So the market has been very, very choppy, up one day, down the next day, and all of that in between. With day trading and scalping, you're able to take money out of the market, meaning you're able to make money day trading the market, whether the market is going long or going short. So basically, with that being said, it doesn't matter if the overall market is trending higher on the day, or it doesn't matter if the overall market is trending lower on the day. We're able to capitalize on both sides of the market. The only thing with that is you can't have a bias, so much coming in. It really doesn't matter what the stock did the prior day. However, you would like to assume if the stock was green yesterday, that if we get some confirmation and some good market help, that it's going to go higher. And if the stock was weak the prior day and the overall market is weak, we can probably get some follow through to the downside. But this is a perfect example today, being that the market closed green yesterday. However, stocks were down and down pretty significantly on the day. So that's why having a bias is not always such a good thing. So that's why all you can see on my chart right now is just pre-market action from today and today's price action. I don't really care what the stock did yesterday, and I don't really care what the stock is going to do tomorrow. All I'm looking for is to catch a nice day trade, a nice scalp in my favor. And if the move fails, and I have to exit that trade for a small loss, then so be it. But here's exactly how we're going to do it. We are going to take pre-market highs. On Apple, the stock was 181.26. That's the pre-market high. And we're going to take pre-market lows of the price of 178.69. What we are then going to do is take the first 5-minute candle of the day. We're going to sit on our hands. We're going to let that opening range develop. And then from there, we're going to also mark out that pre-market or that opening range low and that opening range high. So you can see here, this first green candle that we had on Apple, stock market opened. We came up here, quickly tried to test the pre-market highs, got rejected, came all the way down and put in this opening range break opening range bottom that was almost perfect with the pre-market lows here of around 178.59 or 178.70, right around that area. So then what we're going to do is we're going to look for confirmation going forward, breaking the pre-market highs and opening range break long, or we're looking for a flush through pre-market lows and the opening range break south. In this case, market started to pull in a little bit off the open. You can see here quickly within 10 minutes time that Apple not only tried to test the pre-market highs, got rejected, but came down and confirmed these pre-market lows. This would be your entry here right around this 178.68 to 178.53. What would our stop loss be? Our stop loss is going to be any close back above pre-market lows or any close above the 20-period moving average. As long as we are trading with the 20-period moving average going down, we are going to hold this trade. You can see here within a matter of 5, 10, 15, 20, 25, 30 minutes that the market opened, that not only do we get a good flush, but we got a flush down to $175. With that being said, that's a $3.50 move in your favor. If you were to take the options contracts that are just at the money or even one right outside the money, you would have well been in the money on your options contracts anywhere from 2 to 3 points within a matter of 30 minutes. This alone is enough to take profits. If you took multiple contracts, you could easily scale out here. Like, let's say, for example, you took 4 contracts, 4 puts. You could have easily scaled out 2 puts here, get some consolidation. We get no confirmation closing above the 20-period moving average. We get this next flush. You could have taken some more profits out here at around 174.33. You could have waited for some more consolidation. There's no close over the 20-period moving average. Gives us confidence to hold this short. We get this next flush down here to 173. That's about a 5-point in the money move on your options contracts. I would have scaled out another 1 contract here and probably another 1 contract here. You're never going to catch the whole move like this. To be real completely honest, I played Qualcomm short today. I did not play Apple, but if just looking back at the chart, I probably would have taken anywhere from 5 to 10 contracts in the money or right at the money, probably at the money on Apple, as close as I could have got to the current stock price here. I would have went 5 contracts at the money, and I probably would have sold out somewhere in this green bar, because we have to think about it. Even though right now making this video, we can see all of this. Okay. We could see all of this. It's easy to say, just hold it. You would have made more money. Okay. But when have real money on the table and you're trading live, you don't know that this is coming. Okay. You don't know that this is coming. So this could have easily bounced here, confirmed this move, and went higher, closed here, consolidated sideways, and then started to bounce up higher. It could have easily done that. So just to kind of give you guys an inside look at where my head is at, I would have taken my play here. And as soon as we got this flush here, and we got this little bottoming action here, I probably would have let this 5-minute candle close, seen us wick here. This long wick probably would have shaken me out. And somewhere in this green area, I would have closed, somewhere in this vicinity. So if we look at the actual stock price, if I was to take my profits there, 175.50, 178.69, that's a 3-point in the money move on Apple, more than sufficient enough on a 5-contract move. If you scale up bigger, 10, 20, 30 contracts, you can kind of do the math. If you were to only take 1 or 2 contracts, you still would have had a fantastic trade at 3 points in the money. I mean, you really can't complain about that at all. I mean, Apple did give you another setup here going on later in the day at around 10:45, 10:50. Got that first close over the 20-period moving average. However, it was quickly rejected. We got our first close here, 173.80. You could have taken this short all the way down to 170. So another 3-point move there. But yeah, that's basically how you trade the opening range break, guys. Doesn't matter what the stocks are doing. Doesn't matter if the market's going higher. Doesn't matter if the market's going lower. We can trade both sides, but we do need to stick to our rules. If the trade goes against us, we need to quickly get out of that trade and just look for another setup. And if the trade is going in our favor, we need to let the trade continue to work. As long as we're working below the 20-period moving average if we're going short, or it's working above the 20-period moving average if we're going long. Let the trades work. Sit on your hands, relax, stay patient, guys. I hope this helps. Subscribe to the channel, join the Discord that's down in the description box below, and I will see you guys all in the next video.